Yes, good evening everyone. Please check. Is the audio and the video clear? Okay, just one more minute. Okay, so we are good to go. Let's start. So today we are going to cover IND AS 23. Just 1 minute. Yes, so today we are going to cover IND AS 23, that is borrowing cost. One of the important and one of the easy IND AS, right? If the question comes from this borrowing cost, that will be a bonus question for you. Okay, so just uh, make some notes with me if you are writing with me. Just 1 minute. There's an issue over there. Just 1 minute. Okay, let's start. So let's start with the revision of IND AS 23, that is borrowing cost. So now, what is borrowing cost basically? So whenever we take a loan, we pay interest, right? That interest is nothing but the borrowing cost. Now, what to do of that borrowing cost? Obviously, you will say, sir, we should transfer it to P&L. Obviously, that is interest, right? So if I ask you, what if you take a loan? What is the journal entry of loan taking? You will say it's a bank account debit to bank loan, right? Okay, this is good. Okay, will you pay interest? Obviously, yes. What is the payment entry? Interest payment entry. You will say, sir, interest account debit to bank. Interest being the expense and the amount is going out, right? Okay. What will do of the interest? Obviously, you will transfer the interest, right? You will transfer the interest to P&L. So the entry will be P&L to interest. So basically, borrowing cost is for this transfer entry. This transfer entry. You will not transfer it to P&L, but certain amount, if it is a qualifying asset, that amount will be transferred to the asset. That is, it will be capitalized. That is, it should be charged to the asset and not to P&L. That is, the transfer entry becomes P&L account debit, or else I'll say first asset account debit, P&L account debit to interest. That is, I'm debiting the cost, the interest cost to the cost of asset. That is, I'm capitalizing it. I'm adding the value of interest to the cost of asset. This interest is known as interest capitalized. And the amount which we are transferring is known as the amount expensed. So first we have to capitalize, and the second is we have to expense it out, right? So basically, this chapter is all about what amount of interest to be capitalized. This is nothing but the borrowing cost. Okay, so whenever we pay interest, we don't use the coupon rate over here. Now, what is the coupon rate? Whatever the interest rate is. For example, if I say 12% bank loan of rupees 10 lakhs, 12% bank loan of rupees 10 lakh. So this 12% is known as the coupon rate. That is the interest you will be paying. So if I say 12% is what 10 lakh of 12%, it will come to 1,20,000. That means you have to pay 1,20,000 each year. We will not charge this interest. We have to take EIR. Now, what is effective rate? Effective rate is nothing but which will be actually covered in IND AS 109, that is financial instrument. Although in the regular lectures, I always take an example how to calculate the EIR, but exactly this will now be covered in IND AS 109 when I'll be taking financial instruments. Now, what is EIR? It will be given for borrowing cost. It will always be given to you. It will always be given to you. So basically, I'll just give you a rough idea. Say suppose I take a loan. I take a loan for only 1 year. Okay, for only 1 year. I'm just giving you a rough example of 10 lakh rupees at the rate 10%. So can I say the answer is I'll pay 1 lakh rupees interest. Along with interest, I'll have to pay 10 lakh to the bank, right? But the problem is I did not get 10 lakh rupees in my hand because there was some processing fees also. Let's say I get 9 lakh 50,000. 50,000 was the processing fee and everything. Okay, I'll take it 980. 20,000 was the processing fees, right? So I got in my hand 9 lakh 80. That means can I say I'm paying 1 lakh rupees not on this 10 lakh but on this 980. Obviously I got in my hand 980, right? But I have to pay interest on this face value 10 lakh rupees. That means I'm paying higher interest. I did not get 10 lakh in my hand. I'm not giving you 10 lakh with 10%. I'm giving you 980 on 1 lakh, right? That means this percentage is known as the effective rate. So this will be 1 lakh divided by 980. This will give you 10.2%. That means effectively I'm paying you 10.2%, not 10%. So I'll be taking this rate, effective rate, not the 10% rate, right? So in this chapter, each and every time you will be given the effective rate. So you don't need to worry about how to calculate the effective rate. Okay. Now, second point. Now, what is borrowing cost basically? So borrowing cost, if it is incurred on a qualifying asset, it will be capitalized. That is added to the cost of the asset. If the borrowing cost is incurred for other assets, for example, not for qualifying asset, if it is for not qualifying asset, then it will be expensed out. That is, it will be transferred to P&L. So in short, the total amount, whatever the interest paid is, will it go to P&L or will it be added to the cost of asset? In this chapter, we are learning only this, right? So borrowing cost, if it is on qualifying asset, it needs to be capitalized. Okay. Now what? Now comes the question: what do you mean by qualifying asset? Qualifying asset is nothing but which takes substantial period of time to get ready for its intended use. In short, construction. If I'm constructing a building, it will take generally 1 year, 2 years, 3 years. So in that case, it is taking a substantial period of time to get ready for its intended use. Please make sure you are not taking a purchased asset. If you are purchasing it, for example, if I purchased a car cost me rupees 10 lakh and I took an entire 10 lakh rupees loan and I'm defined at all. Yeah, it is not defined. What is substantial period? Generally we take 1 year. But it is not defined. It depends upon enterprise to enterprise. If they say 4 months is also substantial, then it is also substantial. Whenever the time period is not given, at that time just give a note that assuming that 6 months is also a substantial period and therefore it becomes a qualifying asset. And if it is qualifying asset, then only we can add the interest amount to the as cost of the asset, right? Okay. Moving ahead. Second point. So I have given a few notes which are very important. In the entire chapter, this point is very important. Now, what is borrowing cost eligible for capitalization? So there are two types of borrowing. First is the specific borrowing and the second is the general borrowing. Specific and general, right? Over here, I have written a few points. I'm reading it out. Please pay attention. For specific borrowing, don't check the date on which the expenses was made. Interest will be capitalized on the full amount for the loan for the entire period. Also subtract temporary income. Now, what do you mean by this? I'll give you an example. Please pay attention. See, if this is the number line 1421 and on 31st March 22. First of all, I'll ask you a question, give me the answer and then I'll explain. Okay. Let's say I started construction over here. Started construction and took a loan of rupees 50 lakhs at the rate 10% per annum. Obviously, I need to pay 5 lakh rupees interest, right? Okay. On 31st March 22, that is year end, the building was not yet completed. It was in WIP process, right? That is, it is not completed yet. Now, on 1/4, I spent rupees 10 lakh. On 1/7/21, I again spent rupees 15 lakhs. And on 1/10/21, I again spent rupees 15, or just 20 lakhs on the construction. Can you please tell me what is the amount of loan of interest to be capitalized? I spent on 1/4 10 lakh rupees, on 1/7 15 lakh rupees, and on 1/10 20 lakh rupees. Can you please tell me what is the amount of interest that needs to be capitalized? Okay. One answer I got is 5 lakhs. Neeraj, I don't think they are hidden. Any lectures are hidden actually. So just check on YouTube. The playlist is available. Okay. So the answer to it is 5 lakh. If it is a specific borrowing. If it is a specific borrowing. If it is specific, only at that time I can capitalize the entire amount. That is, I will not check the dates on which the expenditure was made. I will not check the dates. Yes, the answer is 5 lakhs completely, because 50 lakh was the loan taken, and you will start capitalizing the interest from the date of first expenditure itself. That is on 1/4/21. Okay, 1/4/21, I'll start capitalizing 50 lakh entirely into 10%. Into 10%, it becomes 5 lakh. But you will say, sir, I have not spent 50 lakh rupees. The answer is true. So can I say, if you have spent 10 lakh rupees, the 40 lakh was idle for you. You must have deposited somewhere, maybe in your saving account, or maybe your some investment or something. That means you would have earned some interest also. So in that scenario, I'll subtract the temporary income. Whatever the temporary income. Let's say 60,000 you got interest. So I'll capitalize only 4,40,000. This was the scenario. If it is a specific borrowing, I'll read it again. Don't check the date on which the expense was made. Interest will be capitalized on the full amount for the entire period. Also subtract temporary income on idle funds. This is the case when it is specific borrowing. I will not check the dates. I will check the date from when it started capitalizing, and I will end till the completion date. Okay. Now what do you mean by general borrowing? If let's say this was a general borrowing. This was a general borrowing. In that case, if it was general borrowing, that means I haven't taken a loan for this construction. I have taken a lot of other loans, and I've utilized those funds over here. I have not taken a specific loan for this construction. Okay. In that scenario, there will be time ratio, that is time basis. That is, this 10 lakh, did I make it for complete 12 months? The answer is yes. So we'll say 10 lakh into 10% for entire 12 months. Then this 15 lakh for how many months? 9 months, because the expenditure was made on 1/7. So this 15 lakhs into 10% for 9 months. And on this 20 lakhs into 10% for only 6 months. This is the interest to be capitalized. Okay. And moreover, there will be no benefit of the temporary income. Temporary income will be subtracted from this, because temporary income is the point which is to be used with specific borrowing itself. So whatever the answer will be, this will be capitalized. So out of that total 5 lakh, obviously I will pay 5 lakh, but it will not be capitalized fully. It will be capitalized only to the extent of this, whatever the calculations are, and the rest amount will be transferred to P&L. This is the amount, right? So I hope you got this point. That is, what is borrowing cost eligible for capitalization, right? So these are the 2 points. Very important point is on specific, I will not check the date. Okay. Yeah. Moving ahead. The next one. So I've given a few on a number line basis, a few questions just for your understanding. On which date will it start capitalizing and what amount to be capitalized. So I've given a few scenarios. Just pay attention on the scenarios. Number line. So on 1/4/20, I started construction by taking a loan of 50 lakh at the rate 10%. Right. On 31st March 21, interest was paid. How much was the interest? 5 lakh. Interest was 5 lakh, right? So obviously I will transfer this interest, that is, interest will be capitalized, that is building account debit to interest account, that is asset account debit to interest, right? 5 lakh will be capitalized. Interest should be capitalized till the asset is ready for its use, for its intended use, right? That means if you check 31st March 21, 31st March 22, 2 years it was still in WIP. For the third year, it got completed. On 31st March, it got completed. Can I say for the first 3 years, I can capitalize? Yes. But I did not pay out the loan. मैंने loan repay नहीं किया. I haven't paid back the loan after 3 years also. So can I still pay the interest? The answer is yes. You will pay interest, but now you cannot capitalize. That means you have to cease capitalization. When will you cease? when it is ready for its intended use. That is, interest should be capitalized till the asset is ready for its intended use. After this level, after 31st March, even if you continue the loan, you will not be able to capitalize it. You have to expenses out. That is, interest should be expensed. And now, if you can look at the fourth entry, I have transferred it to P&L. I have transferred it to P&L. I have transferred the interest to P&L and not charged to asset. That is, I haven't capitalized. Moving ahead. One more example, right? Okay, please pay attention. On 1/4/21, I took a loan of 50 lakh for construction at the rate 9%. I took a loan, but I did not start construction. I did not start construction. Taking a loan does not tell you that you can start capitalizing. The point is, when you will start the construction, at that time you will start capitalizing it. That means both the conditions should be valid. There should be a loan taken and there should also be the asset constructed. If both the conditions are satisfied, only then you can capitalize it. That is, obviously I have to pay interest from 1/4, but you cannot capitalize. For the first 3 months, that is 1,12,500 is the interest, you will not capitalize it, you will transfer to P&L. On 1/7, when you started with the construction, after that you can capitalize it for 9 months. That is 3,37,500. Okay, next point. I have turned the tables now. I started construction first, that is on 1/4/21 I started construction, but I did not take any loan. The loan was taken on 1/7. Obviously, on 1/7 I'll start paying interest. That means for this period there was no interest only. If there is no interest, I cannot capitalize. And therefore, interest will again be capitalized only for this period. That is, whichever date is later, you will have to start from there. If the loan is taken at a later stage, we will start capitalizing from there. If the asset is started constructed at the later date, then you will start from the later date, not from the initial date. Okay, these are the 2 points. I hope the point is clear. Moving ahead to the next question. Okay. So I've just made it as a summary basis, so you will get a better idea for all the cases. Okay. So on 1/4/21, I took a loan of rupees 40 lakh at 9% for construction, and construction started immediately. So on 1/4, I took a loan and I started construction. Look at the last date, on 31st March. On 31st March 22, construction got completed, but I spent rupees 50 lakh. I took a loan of 40 lakh, but I spent rupees 50 lakh. Obviously, that 10 lakh was my own capital. Can I capitalize interest on my own capital? The answer is no. Interest to be capitalized will only be on 40 lakhs because the loan was only of 40 lakhs. No interest on own capital. खुद के पैसों पे ब्याज नहीं लगाता है. No interest on own capital. So interest will be capitalized on 40 lakh only and not on 50 lakh rupees, right? Okay, moving ahead. Next one. On 1/4/21, I took a loan of 40 lakh at the 9% for construction, and the funds were used in installments, and the bank gave interest of 70,000 since the funds were lying unutilized in saving account. So bank paid me interest, right? First of all, how much was the interest paid? 40 lakh into 9%, that is 3,60,000. Obviously 3,60,000 was the interest, but since I earned 70,000, that is known as the temporary income, it will be subtracted, and 2,90,000 will only be capitalized. Okay, it's only 2,90,000 will be capitalized. Okay, so this was about the specific fund. Now, the next point is suspension. Now, what do you mean by suspension of interest, suspension of capitalization? See, over here, I took a loan of 40 lakh at the rate 9%. Between 1/8 to 39, that is the period for 2 months, I had to stop construction due to labor strike. It was an abnormal reason. So for that 2 months, I cannot capitalize the interest because there was no construction going on in that period. So I need to stop. That is, I need to suspend the capitalization. It is known as suspension of capitalization, right? After the work is done, I can start capitalizing again from 39 itself. So in this period, if this is the period and this is the period, 6 months and 4 months, I can capitalize. But for this 2 months, I need to expenses out. That means I have to transfer it to P&L. I cannot capitalize if it is abnormal reason, labor strike or shifting of the premises and so on. But if it was for normal reason, if I stopped my work because of the normal reason, let's say I am constructing a building at a sea level, and during rainy season the water comes up, and for 2 months I will not be able to construct. Now, did I stop because of labor strike or something? No, it was very normal. It was not only for me, but the water level was so high that I was not able to work at that time. That was a normal reason. So in that scenario, you will not suspend. So I've given a note over there. Note, if the work is stopped due to normal reasons, that is increase in sea level or etc., then interest capitalization should not be suspended. You will still continue to capitalize for the entire 12 months, right? So in this scenario, 2 months was suspended because of the labor strike. There was abnormal reason, and other amount was capitalized, right? But if it was a normal reason, then at that time you will not suspend, you will continue to capitalize. Moving ahead. Okay. Next scenario. Took a loan of rupees 50 lakh at 9% for construction, and that was for specific borrowing. Okay. 1/6 started construction and spent rupees 10 lakh. And on 31st March, it was still in WIP process. Can you please tell me what is the amount of capitalization? No, machine breakdown will be an abnormal reason because you might have not properly serviced it. If it was due for service, you haven't serviced it properly, and therefore it will be treated as the abnormal reason. Okay. Please read the question and give me the amount of capitalization. Yes, I need an answer, quick. Okay. So 260 to 500 if there is no temporary income received. Fine. See, the answer is very simple. I told you not to check the dates and not to check the amount for specific borrowing, right? Obviously, I'll not take 10 lakh, I'll take 50 lakh, but I cannot start capitalizing from the first date itself. Why not first date itself? Because there was no construction. So I need to start capitalizing from this date. That is from 1/6. That is, I'll spend 50 lakh entirely into 9%, but for 10 months only. Because first 2 months there was no construction. Obviously, I need to pay interest. I will pay interest, but that period will be expense out. That is transfer to P&L. Okay. So 50 lakh into 9% only for 10 months because the construction was started on that date. So at that point, amount is irrelevant. I have to spend on 50 lakh itself because it is specific borrowing, right? Obviously, if there was any temporary income, I would have subtracted because it was specific borrowing. Okay. Coming to the next question. Same question, but instead of this, there was specific borrowing, and now it was general borrowing, and now it was general borrowing. The answer was not matching. Yeah, the answer is 3,75,000. The answer is 3,75,000 because I only capitalize it for 10 months. The loan was 50 lakh into 9%, but it will start capitalizing on 1/6, right? Not from 1/4. Why not 1/4? Because the construction was started at a later date. I did not take 10 lakh because it was specific borrowing. The entire amount is to be taken, not the expenditure amount, right? Okay. Same question, but with general borrowing. Give me the answer. Same question, but with general borrowing. This time, it will not be 50 lakhs. Since it is from general borrowing, I have to take 10 lakh and for this period only. I'll take only on 10 lakh on for this period only. Obviously, I'll pay interest on the entire amount, but 75,000 will be capitalized and the rest amount will be transferred to P&L. This is the point. I hope you got this point because the period is very important. When I'll start with the proper questions, you will face difficulties in that. So basically, if you make a number line, it will be very easy for you. Okay, moving ahead. Okay, so this is a question where I have taken the WACB. So when I say it is from general borrowing, what you have to do is the very first step is you have to calculate the WACB. Now, what is WACB? It is also known as the capitalization rate or the weighted average cost of borrowing. If I talk about in FM terms, it is WACC. weighted average cost of capital. So over here we say WSCB, weighted average cost of borrowing, or else we can say capitalization rate. Now how to calculate the capitalization rate? It is very simple. 30 lakh into 9%. What was the interest rate? 30 lakh into 9%. What was interest? So you will say interest is 2 lakh 70. 20 lakh into 12%. What was the interest? You will say 2 lakh 40. Right? So 270 was the interest and 240 was the interest. What was the total interest? 510. And what was the total amount? It was 50 lakhs. 50 lakhs, right? So 510 is what percentage of 50 lakhs you will get the weighted average cost of borrowing. So over here, if you can check, I've given two methods for it. First is your FM method, that is WACC method, by taking the weights and the percentage. And the second method is directly calculate the interest. And when you take the interest, total of interest divided by this, you will get the weighted average cost of borrowing. Whenever whenever general borrowing is there, whenever two or more loans are there, always take the WACB, that is the weighted average cost of borrowing. Now, one important point on WACB is, if I say loan taken date of loan taken was 1/4/2021 and the date of loan taken was 1/7/21. It was 9% debentures and 12% bank loan. Okay, the amount was 5 lakh and the amount was 8 lakh. So what is the interest you will pay? Obviously, on 5 lakh, it will be 9%, but for entire year, so it comes to 45,000. Right? And on this 8 lakh, you will pay 12%, but not for entire year, you will pay only for 9 months, right? So into 9 by 12, it comes to 72,000. So what is the total interest you are paying? You are paying 1,17,000, right? So you will not say 1,17,000 divided by 13 lakh. No, this is incorrect. What you have to do is, you have to take 1,17,000 divided by the weighted average also. That means 5 lakh was utilized for the entire 12 months into 12 by 12. Plus 8 lakh was there only for 9 months. So you have to take 9 months over here. This was important. This is how you calculate the weighted average. Let's calculate. So it is 5 lakh on the denominator, 8 lakh into 9 by 12 in the denominator, 11 lakh in the denominator, 1,17,000 divided by 11 lakh percent will give you 10.63%. This is how you calculate the WACB. I hope everyone got this point. If you have any query till in the calculation of WACB, please ask. WACB, that is the weighted average cost of borrowing. See, most of the times the dates will not be given. You can calculate directly by taking the total interest divided by total loan amount. But sometimes the date will be given, the date on which the loan was taken. At that time, you have to calculate it like this. Weighted average cost of borrowing. Yes, please tell me. Is the point clear? Okay, moving ahead. So, how to calculate WACB? The point is very clear. Okay, fine. Moving ahead. Now, one of the important question is loan taken in foreign currency for construction purpose. Okay, so I've taken it with an example. Please pay attention and please be attentive. On 1/4/2020, we took a loan for construction, $80,000 at 8%. But we are in India, obviously I cannot record dollars. So I need to convert into rupees. On 1/4/20, the rate was 52. But on 31st March 21, the rate turned to 56. Now this is a complete loss for me. How come? Let's see. See, you took a loan. So if we are in India, obviously I not record in dollars. I have to record in rupees. So I need a conversion rate. So obviously I'll take the conversion rate when I took the loan. So it was $80,000 and the rate was 52 at that point of time. So what was the journal entry of loan taken? So you will say bank account debit to bank loan. I'll say 8% bank loan. Obviously, it was $80,000 into rupees 52. This was the journal entry, right? So 80,000 into 52. 41,60,000 was the loan amount. 41,60,000 was the loan amount at that point of time, right? It was on 1/4/2020, I guess. 20, yeah, 1/4/20. Okay. At the end of the year, you have to pay interest. Obviously, you will not pay interest on 4160 because I haven't taken 4160 from them. I have taken $80,000. I have to pay interest on that, right? So what is the amount of interest you will be paying? Obviously, $80,000 into 8%. Into 8%. So what is the amount of interest? So 80,000 into 8%. It is 6,400. If I ask you, what is the payment entry? Interest payment entry. Interest pay. Obviously, you will pay at the end of the year. Interest pay. So obviously, it is interest account debit to bank, right? So what is the amount of interest you will be paying? Obviously, it will be $80,000 into 8% because you have taken the loan in dollars. But are you paying the interest on first day? No, you are paying on the last day. The last day, the problem is the rate turned to 56. Obviously, you have to pay by 56 now. So you'll multiply by 56, rupees 56. This is the amount of interest paid. Okay. Can you capitalize this? The answer is yes. It was for construction. You can capitalize it. Okay. So what is the amount? 6,400 into 56. So it comes to 358,400. Can I capitalize this? The answer is yes. You can capitalize this. So this is not the problem. The problem is I am asking you, why did you took a loan from USA? USA क्यों लोन लिया? What was the reason? You will say, sir, the interest was cheaper. I was getting a loan at a cheaper rate from there, and that's why I took a loan from there. Now the problem is you did not, you only checked the rate, but what about the exchange fluctuations? At the end of the year, it turned to 56. Now, can I say you have to pay the loan of $80,000 only, but this time you have to pay by 56 rupees. That means 4 rupees you have to pay extra. When you took the loan, the rate was 52, and now when you will repay, the loan will be 56. That means 4 rupees is the complete loss for you. Now, can I say the loan amount has increased now because in the balance sheet date, if you are making a balance sheet as on 31st March 22, if you are writing 8% bank loan over here, so bank loan as on 31st March is not 41,60,000. The rate has increased now 56 because the loan is still $80,000, but this time I have to pay by 56 rupees. So 80,000 into 56 will be 80,000 into 56 will be 44,80,000. That means I did not take extra loan, but still the loan amount increased. This was the loss for you. So what was the total loss? You took a loan of 4160 and now you have to pay 44,80,000. That means, can I say there is an exchange loss of 3,20,000? The answer is yes. Now, Ind AS 23 says that I will give you an option to capitalize this also, not completely, but up to certain extent. And why is the option given? See, it is very simple. I'll ask you, why did you take a loan? Why did you take a loan from outside India? So you will say the rate was cheaper. Okay, fine. I'll tell you, let's assume you did not take a loan from there and you took a loan from India itself. So at that time, obviously it was costly for you, right? What was the rate at that time? You will say the rate was, I haven't given the rate. Okay. The rate was 12% at that time. The rate was 12%. And what was the amount of loan borrowed? You will say 41,60,000 I was needing, right? Okay, fine. So I'll tell you, 41,60,000, if you borrowed in India at that time, you would have paid 12% interest. You will say yes, obviously. So 41,60,000 into 12%, this will give you 4,99,200. Let's forget the history now. Let's forget that dollar and everything. If you would have taken the loan in India, I would have given you an option to capitalize 4,99,200, right? I would have given you the option because this is the interest and this is the borrowing cost on construction, right? So I would have given you the option to capitalize it. Now also this option is open for you. I will still give an option to capitalize till 4,99,200. Okay, what is the amount of interest you capitalized? You will say I have capitalized only 3,58,400. Okay, so 3,58,400 you have capitalized. Already interest capitalized, right? What is the balance amount? 358,400. So the balance amount comes to 140,800. I will tell you, out of the exchange loss, I will give you an option to capitalize the loss, not to P&L, but to capitalize it. That is, what was your loss at that time? You will say, sir, the loss was 3,20,000. So, I will not tell you transfer it to P&L completely. No. You still have an option to capitalize it up to the extent of if the loan was taken in India. If the loan was taken in India, you would have you have the option to capitalize. And if you would have taken the loan in India, I would have given you an option to capitalize 499,200. But since you took it from outside India, you have just capitalized 358,400. So the option is still open for you. The option is still open for you. I will give you an option to capitalize till 499,200. You have capitalized only 358,400. If there is any loss up to 140,800, I will give you an option to capitalize. But above that, obviously, you have to transfer it to P&L. That means if there is any exchange loss will obviously be transferred to P&L, but not entirely. Up to the extent you can capitalize it, and this is the extent. I hope the point is clear. So I'll explain over here. Please pay attention. On 1/4, the loan was taken, right? So first of all, calculate the amount of loan it was taken. The loan was 41,60,000. First step is this. First step. If the loan was taken in India, what was the amount? The amount was 41,60,000. Second thing, what is the amount of interest paid? You will not say 41,60,000. You will have to pay the interest on the dollar loan only. So 80,000 was the dollar, 8% was the rate. 80,000 into 8 becomes 6,400. And since you are paying on the last date rate is 56. The last date rate is 56. 56, the interest capitalizes 358,400. Okay. Now I am telling you, if the loan was taken in India, what was the amount of interest you should have paid? So obviously, you will say 41,60,000 was the loan amount, 12% was the interest, and you will pay 499,200. Out of this, 358,400 you already capitalized. 140,800 is pending, and exchange loss up to this amount can be capitalized. And now it's time to calculate the exchange loss. What was the dollars? 80,000. What was the loss? 4 rupees. How come 4 rupees? 52 to 56. 4 rupees was the loss, right? Because I have to repay it 4 rupees more now. 320 up to 140,800 it is capitalized, and above that it is transferred to P&L. Now this was the first year story. This was the first year story that was on 31st March 21. Now the second year story. Second year story. Please pay attention. Second year story. On 31st March 22, that is the next year, the dollar rate dropped to 54.5. That is, previously it was 56. Now it dropped to 54.5. Can I say 1.5 is the gain for me now? Because I will have to pay 54.5 now instead of 56. That is 1.5 is the gain for me now. Now 1.5 is the gain. 80,000 into 1.5 is 120. Point to be noted is, if previous year was not there, if it was the first year, I would have transferred the gain to P&L. This is as per Ind AS 21 foreign exchange rates, right? If it was the first time gain, I would have transferred it to P&L. But before transferring to P&L, ask a question. Was there a loss in the previous year? You will say, yes, sir, there was a loss of previous year. Did you capitalize it? The answer is yes. What amount was capitalized? It was 140,800. So up to 140,800, you will not transfer it to P&L. You will charge to asset only. If there was a loss, you were debiting it to asset. If there is a gain, you will credit to asset. That means you will reduce the cost from the reduce the cost of asset and not transfer it to P&L. This is the point. That is, if there is previous year loss, did you capitalize it? The answer is yes. What amount was capitalized in the previous year? It was 140,800. Now, if at all in the next year, in the subsequent year, if at all there is a gain, I will not tell you transfer it to P&L. In the previous year, you charge to asset. Now it's the time. If there is a gain, reduce the cost of asset. So up to 140,800, I will tell you to reduce the asset. It is only 120, right? So obviously, exchange gain will not be transferred to P&L, but will reduce the cost of the asset. Okay, this was case A. Now forget this case. Forget this case. Continuing the same example, I capitalize 140,800, right? If the rate in the next year comes to 50 rupees, that means, can I say the rate dropped from 56 to 50? That means a benefit of 6 rupees. 6 rupees benefit, gain of 6 rupees. 80,000 into 6, 4,80,000 was my gain. Obviously, I should transfer it to P&L. But was there a previous year loss? The answer is yes. What did you do of that loss? You capitalize it. Now it's the time to reversal. So out of this 480, 1,40,800 will be utilized to reduce the cost of asset because you transferred it to asset in the previous year, and the balance amount will be transferred to P&L. This is the point. Yes, Yashwant, after as soon as I complete this IND AS, I'll give the list. Okay, so I hope this point is clear. I hope this point is clear. All the two cases, case A and case B also. If you have any query, please tell me. I'll give you one more example to make you understand this concept. There is the foreign exchange. Loan taken in foreign currency. This is one of the important question, okay? Loan taken in foreign currency. So the entire concept was on exchange loss, capitalize or P&L. So capitalization is the point, but only up to certain extent. If the loan was taken in India, what was the amount to be capitalized? That is the point. Please tell me. Yes. Is the point clear till here? Okay, moving ahead. Cessation, that means to stop. Stop capitalizing. When will you stop capitalizing? So I've taken two scenarios. So basically, first of all, I took a loan for a factory, 50 lakh rupees. Okay. In that factory, I have to make two machines. First is the fabrication and the second is the painting machine. Okay. Fabrication machine was ready, but the painting was not. Painting is still in process. Can I stop capitalizing? The answer is no. Continue because I took a loan for factory, not for fabrication machine or not for painting machine. Since fabrication machine is incomplete without the painting, obviously no one will take the fabricated product unless and until it is painted, and therefore it is not complete yet. If it is not complete, it is in WIP process, and therefore you cannot seize it, you cannot stop capitalizing, you still continue to capitalize till the asset is ready for its intended use. Moving ahead. Now, second scenario is I took a loan of 200 crores and I'm constructing a building, 4-story building, phase 1, phase 2, phase 3, phase 4. I took it 50 crore, 50 crore, 50 crore, 50 crore for all the buildings. I started constructing all the buildings together. 2 buildings are ready and 2 buildings are still incomplete. Can I stop capitalizing on the first 2 buildings? The answer is yes. If I ask you, will you be able to use this 2 buildings right now? The answer is yes. Obviously, the 2 buildings are still in WIP, but the 2 buildings are ready for use. So, can you stop capitalizing? The answer is yes. Because in individual capacity, you will be able to use them. And therefore, you can stop capitalizing and continue to capitalize on the third and the fourth phase, right? Okay. Next point. If from a general borrowing, you are utilizing the funds for 2 things. One is the qualifying asset and one is the non-qualifying asset. Then the interest paid will also be divided into 2 parts. For example, the loan is 20 lakh rupees and you took it 10%. It was general borrowing, not specific. Okay. It was utilized for a qualifying asset and for working capital. Working capital is a non-qualifying asset, right? So this 20 lakh was used as 5 lakh and 15 lakh and 5 lakh. So what was the interest on this 20 lakh per 10%? 10% of 20 lakh comes to 2 lakh rupees. So this 2 lakh will be divided in the ratio of the utilization. That is in the ratio of this utilization. 15 lakh is to 5 lakh. That is 2 lakh will be divided into 1 lakh 50 and 50,000. The amount of 150, since it was on qualifying asset, it will be capitalized. The amount of 5 lakh, since it was for non-qualifying asset, it will be expensed out. This is the same answer, but this is not important. The important is the next scenario. I took a loan of 20 lakh. See, I took a loan of 20 lakh at 10%. Obviously, the interest is 2 lakh. But the amount spent was 18 lakh and 12 lakh. The amount spent is 30 lakh. Now you will say, sir, from where did you get the 10 lakh? 10 lakh was my own capital. 10 lakh was my own capital. Now, can you please tell me what amount was utilized? The answer is no. From borrowing and from loan, from the own capital, total was 30 lakh. I don't know from where did I use the funds. 18 and 12 was the answer. So total of 30 lakhs, right? So interest will be paid 2 lakh rupees. in this ratio will be divided, in the ratio of 18:12. In the ratio of 18:12. This is the important point. So sometimes there will be a loan, but the utilization will be more than the amount of loan, because that is the own capital, right? So in that scenario, you will apportion the interest on the basis of their utilization, on what amount did you utilize, right? So this is the scenario. 18:12. So 2 lakh will be apportioned in 18:12, that is 1 lakh 20 and 80. 120 will be capitalized, and only 80,000 will be transferred to PL. Yes. So these are the points. I explained you suspension, I explained you cessation, how to apportion the interest, I explained you specific borrowing, I explained you the general borrowing. All these scenarios are done, right? It's time for the question now. Yeah, one of the very important question, a very good question, okay, a very, very nice question. It consists of 23 also and PPE also, in AS 16 also, right? So I'm reading out the question, please pay attention. On 1st April 23, Green Limited started the construction of an office building, that is a qualifying asset, on 1/4/23, okay, it started. The land under the building is regarded as a separate asset and is not a part of qualifying asset. For the purpose of construction of building, the company raised a specific loan of 14 lakh rupees from a bank at an interest rate of 12% per annum. That means you took a loan of 14 lakhs at 12% per annum. It was specific. A temporary income was 15,000 was earned on this loan while it was held for anticipation of payments. That means 15,000 will be deducted since it is a temporary income. 14 lakh was the specific loan, and it was the construction started on 1st April. Okay. The company's other outstanding loan as on 1st April were as follows: 20 lakh 15%, 30 lakh 8%. Can I calculate the interest? The borrowing cost? Yes, WACB. So what is the interest? It is 20 lakh into 15% M plus 30 lakh into 8% M plus. Total interest comes to 5 lakh 40,000. 5 lakh 40 divided by 50 lakhs. Percentage will give you 10.8%. This was one of the option. I use always this option. You can calculate by weights also. Okay. So 10.8% is the WACB. So basically I have got two loans now. First is the specific of 14 lakhs and a general of 10.8%. Specific was at 12% and general was at 10.8%. Moving ahead. The construction started on 1st April and was completed on 31st January. This is important. This is important. 1st April it started and it ended on 31st January. How many months? Count. April, May, June, July, August, September, October, November, December, and January. 10 months. 10 months was the total period, right? Okay. Up to the date of completion, the following payments were made out to the contractor. So on 1st April, it was 4 lakh. On 1st August, it was 10 lakh. It was on 1st December, it was 25 lakh. And on 31st January, it was 5 lakh. Can I say 4 lakh? Obviously, it was specific. 10 lakh was also from specific, because first I will use specific, right? Obviously, I took a loan of 14 lakhs for the specific for this construction itself. This 25 was from general, and this 5 lakh was from again general, right? So if I make a number line, okay, I'll proceed with the question. The life of the building is estimated 20 years, okay, and the depreciation is calculated on the straight line method. Calculate the amount of borrowing cost to be capitalized. So I'll just cut it short. I'll just show you the number line. So this is the number line. 4 lakh, 10 lakh, 25 lakh, 5 lakh. 4 expenditures made, right? 31st January, it got completed. Obviously, the first 2 expenditures were 14 lakh specific. The other 2 were from general. And the construction got completed on 31st January. Now the question comes, what is the amount of specific borrowing cost? The question is right in front of you. 15,000 was the temporary income also. Temporary income also. Can any one of you tell me what is the specific borrowing cost? I took a loan of 14 lakh at the rate 12%. Can any one of you tell me the answer? I'll just give you a few seconds for this. 153. Okay, 153. So the rule is very clear. I will capitalize this 4 lakh at the rate 12%. For how many months? It will not be for 1 year, it will be for 10 months, right? Okay. This 10 lakh, 12%. For how many months? If you say, sir, reduce by 4 months, the answer is no. It will still be for 10 months. Why 10 months? Because specific borrowing does not look at the date. It will be, obviously, the entire amount will be 14 lakh, and 14 lakh will be at 12% for 10 months. This will be the answer, minus the temporary income of 15,000. This will be your total answer. So if I say 14 lakh into 12% into 10 divided by 12, so the answer comes to 140. The only problem is the students calculated it on per year basis. On per year, you would have calculated on 14 lakh, 12%, 168 minus 15,000. The only problem with the students over here is they do not check the date of completion. After completion, I cannot capitalize, right? The completion was on till 31st January. So I have to charge only for 10 months, not for 12 months. The date for incurring the expenditure is not important, but the date of completion is important, right? After completion, there is no capitalization after completion, right? So I cannot capitalize after 31st January. This is one of the important point. Okay, fine. So this we are done. 1 lakh 25,000 was the case, right? So it was 14 lakh into 12% into 10 by 12. The interest comes to 140. 140 minus 15 will come to 125. 125 will be the interest. Okay. Moving ahead. On this 25, 112 till 31st Jan. Can I say 2 months? Yes. For 2 months, the answer will be, it was general borrowing only for 2 months. And on 31st Jan, obviously on 31st Jan, the work was completed. I cannot capitalize it. So it is for 0 months, right? So this is the answer. Please have a look. I've calculated 10.8% already. I've already calculated 10.8%. Please pay attention on this. So over here, specific 4 lakh for 10 months. For again specific, it was again 10 months, not from 1.8 but from 1.4 itself. Okay. On 25 lakh, it was for 2 months, and for 5 lakh, it was for 0 months. 15,000 was the temporary income, and 1,70,000 was to be capitalized. I hope the point is clear. 1,70,000. Yes. Vishnu, Jyoti, both of you answered it incorrectly. I hope the point is clear now. So 1,70,000 was the amount to be capitalized. Moving ahead to the second part of the question. The first point told to calculate the amount of borrowing costs, right? Second, pass journal entry to recognize the cost of building. Now, what was the cost of building? The amount incurred. What was the total amount incurred? 4, 10, 14 and 30, 44 lakhs. 44 lakhs plus 1.7 lakh was the amount of borrowing cost, right? It needs to be capitalized. So can I say the journal entry is nothing but building to bank or payable? What is the point? Building to bank. And can I say to interest? Because the interest was, if I say interest payable or something, interest was 170, bank was 40 and 44, and 45.7 was the amount of building. Okay, second point done. Can any one of you tell me the depreciation for the current year? The depreciation for the current year. The cost of the building is now 45,70,000. The life is estimated at 20 years. The life is estimated at 20 years. Yesterday only we completed PPE. So I hope this point you should be able to answer. I need the amount of depreciation. I need the amount of depreciation. $45,70,000 was the cost of assets, scrap 0, life 20 years, and depreciation starts from the date it is ready to use. It was ready to use on 31st January, right? Can I say only 2 months depreciation, that is February and March? Only 2 months depreciation into 2 by 12. Into 2 by 12. So let's see, into 2 by 12 comes to 38,083. 38,083. The point is depreciation starts from the date it is ready to use. Depreciation starts from the date it is ready to use. So building ready to use was on 31st January. 2 months depreciation was there, 38,083, and the WDV will be 45,31,917. This is the answer. See, you have to pay attention. See, I have given over here. Please pay attention on what is the amount, from what date you should start the depreciation. You cannot depreciate it for the complete year since it was not ready for use, right? So you have to pay attention on each and every line. And the last point was carrying amount on 31st March. After depreciation, the balance comes to 45,31,917. This is your final answer. So I hope you got this point. Moving ahead to the second question. What's the second question? Let's read. On 1st April 21, entity A constructed for the construction of building for rupees 22 lakhs. Contracted for the construction of building for rupees 22 lakhs on 1st April. Okay, the dates are very important. The land under the building is regarded as a separate asset and is not a part of the qualifying asset. The building was completed at the end of March 22. Now the building was completed at the end of March 22 itself. That means you can say the complete year, one full year. Okay, so this is not that twisted question. The previous one was very twisted because it was complete on 31st January. And during the period, the following payments were made. The payments are 200 in thousands. So I can say the amount is 2 lakh, 6 lakh, 12 lakh, and 2 lakh. Okay, so the dates are given. Entity A is borrowing at its year end on 31st March 22 were as follows. So what did you borrow? Let's see. 10% 4-year note with simple interest payable annually, which relates specifically to the project. When I say specifically to the project, it is a specific borrowing. It is a specific borrowing. Can I say this 10% is the specific borrowing? Yes. Outstanding amounted to rupees 7 lakh rupees. Interest of 65,000 was incurred on these borrowings during the year, and interest income of 20,000 was earned on these funds. That means I have paid interest of 65,000 and I have also earned interest of 20,000. Obviously, 65,000 I paid and 20,000 I got. 20,000 will be subtracted as temporary income, right? But the amount of loan is 7 lakh. 7 lakh is the amount of specific borrowing. 7 lakh is the amount of specific borrowing. Okay, moving ahead. 12.5% 10-year note with simple interest payable annually. Debt outstanding on 1st April amounted 10 lakh and remained unchanged. So it was 10 lakh rupees, 12.5%. This is general borrowing. It was not for specific. Again, there is 10%. 10-year note with simple interest from 1st April amounted to 15 lakh and remain unchanged. That means there are two general borrowings, 10 lakh at 12.5%, 15 lakh at 10%. Let's calculate the rate. Let's calculate the rate, capitalization rate. So we have 10 lakh at 12.5% and 15 lakh at 10%. And 15 lakh at 10%. So it comes to 10 lakh into 12.5% M plus 15 lakh into 10% M plus. So the total interest comes to 2,75,000 and the total amount is 25 lakhs. Divided by 25 lakhs. This will give you 11%. So the WACB, or else we can say the capitalization rate is 11%. Weighted average cost of borrowing, right? So basically I can say I have a specific borrowing of 7 lakh. The rate of which, or else I can say the direct interest is given 65,000 and 20,000 interest income, and on general I have 25 lakhs at the rate of 11%. I can say it like this. So I don't have two loans, but I have only one. Okay, moving ahead. Determine the amount of borrowing cost which can be capitalized. Okay, now comes the point where you have to make a number line. Very important case. 1/4/2021 till 31st March 2022. Just plot the amount on which the expenditure was made. So on over here it was 2 lakh. On 30 June you spent rupees 6 lakh. On 31st December you spent rupees 12 lakhs. And on the last date you spent rupees 2 lakh. Now comes the question, from where did you spend? Obviously this is from specific. 7 lakh was specific, 2 lakh is from specific, 5 lakh is remaining. So can I say out of this 6 lakh, 5 lakh was from specific and 1 lakh was from general. Obviously, the other was general and general. The other was general and general. You have the rates with you. You have the rates with you. Please tell me what is the amount you will capitalize. What is the amount you will capitalize? I have given you the number line complete concept. Also, I have calculated the rate WSCB. On specific from start to end completely. On general, you have to take the time period. On specific, right from the beginning till the end, it is completed. You have to capitalize it completely, taking the temporary income also. Yes, give me the answer. Give me the answer. See, you have to count the number of months first. For this 1 lakh, from 30 June to 31st March, it comes to 9 months. From 31st December to 31st March, it comes to 3 months. And the last date is 0 months, right? You don't have to calculate the interest on these dates because specific the amount is directly given to you. So I can explain the answer over there. I've given the dates and from where you have started the borrowing. Specific, general, right? I've already explained you on the number line. So on specific, the rate was directly given 65 minus 20, 45,000. And on general, you just have to take the amount of expenditure and the number of months. So for first one, it was 9 months. For the second one, it was 3 months. And for third one, it was 0 months. So 1 lakh into 11% for 9 months, 12 lakh into 11% for 3 months, and 2 lakh into 11% for 0 months. This will be the total cost which will be capitalized. This will be the total cost which needs to be capitalized. I hope the point is clear now, because see, you have to be very careful with specific and general. Specific start to end completely. General from the date you have spent till it is completed. It is from general. Okay. So these are the 2 points which you need to be very careful of. Okay. Moving to the third question. Okay. Now this is the case where EIR is used. EIR is nothing but the effective interest rate. As I told you, it will be clearly given. But whenever EIR concept is given, you have to make LAT. What is LAT? The loan amortization table. The loan amortization table. That is nothing but the concept of IND AS 109, financial instruments. Or else, if you have skipped that chapter up till now, IND AS 109 is not yet completed, if at all. Or else, if you do not recall that chapter, just recall the hire purchase principle. In that way, we used to make a table, opening, closing, IGI. That is the complete table. I'll make you understand. Examine how will you capitalize interest when qualifying assets are funded by borrowings in the nature of bonds that are issued at discount. While immediate issued at the start of year 1, 10% interest paid annually and having maturity period of 4 years. That means you have to pay interest 10%. After 4 years, you have to pay back. After 4 years, you have to pay back. With a face value of 2 lakh at a discount of 10%. That means 2 lakh was the case. 2 lakh. But in hand, you got only 180 because you issued at 10%. But the rule is you will not pay interest on 180. You have to pay interest on face value itself. That is, you have to pay interest every year 20,000. So, is it 20,000 to be capitalized? The answer is no. I already told you, it is not the coupon rate which is capitalized. It is the EIR which needs to be capitalized. What do you mean by this? I'll read further. To finance the qualifying asset at the end of year 2. Compute the amount of borrowing cost to be capitalized if the company amortizes using interest effective rate at 13.39%. Now, how to calculate this? This will be learned in IND AS 109, right? How to calculate the effective rate. But over here, they have clearly told that the interest, the qualifying asset will be completed at the end of year 2. The life is 4 years, but it will be completed at the end of year 2. So I have made a number line. Please pay attention on the number line. On 1/4/21, the construction started, and I also took a loan. 2 years, obviously, I will capitalize, and after 2 years, I will not capitalize because the asset will be ready for its intended use at the end of year 2. So basically, I have 4 years. First 2 years I'll capitalize, other 2 years I'll not capitalize. I'll transfer it to P&L. Okay. I got 1,80,000. So don't tell that, sir, if you are paying interest of 20,000 per annum, so 20 plus 20 is 40, transfer 40,000. No, I cannot use the coupon rate. This is known as the coupon rate. But over here, I have to take the effective rate. How to calculate the effective rate? Please check. Not the effective rate, the LAD table. So opening, closing, IGI. What is IGI? I is the interest, G is gross amount, I is installment, and C is the closing balance. For example, first of all, you have to understand that you have not taken a loan of 2 lakh, but you have taken only 180 because 180 was in your hand. Interest at the rate EIR, which was given as 13.39%. It will always be calculated on opening. So 180 into 13.39%. It comes to 24,102. This is the amount you will capitalize. This is the amount you will capitalize. Okay, 13.39%. Not the coupon rate, but the amount which you are getting at the EIR. 24,102 plus 180. Plus 180 will give you 2,04,102. That is opening plus interest. Now, do you have to pay something in the first year? The answer is yes. You have to pay interest of 20,000 each year, right? You cannot capitalize 20,000. You will capitalize this 24,108. But what is the amount you will pay? You will pay 20,000. So out of this 204, you have paid 20,000. So what is the loan remaining? 184,102. This is the closing balance. That is nothing but gross minus installment. Now, opening balance comes to 184,102. Now you will charge interest on 184,102 at the rate 13.39%. This will come to 24,651. The total comes to 208,753. Again, you have to pay 20,000 interest. What are the closing balances? But the important point is these 2 years, the amount to be capitalized. The amount to be capitalized. Irrespective of what you have paid, you can capitalize at EIR, not at the amount paid. Right? So this is the point. In this question, they have asked you what is the amount to be capitalized. The amount to be capitalized is total of this 45 something or 48 something. Right? So this is the amount to be capitalized. I have given the explanation over here. I have given the explanation, that is 48,753 is the amount to be capitalized. It will not be the coupon rate which you are capitalizing. It will be the rate of EIR which you need to capitalize. So I hope you got this point. This is the third point. See, I am making all the points clear. I am revising it all the points. Like first I revised the foreign exchange, right? In next year, if the rate drops, if then what to do? Then I have completed the specific and the general borrowing, right? And I'm taking a lot of practice questions on that only. So this is important because if you know how to calculate the rates, only at that time you'll be able to solve. Okay. Question number 4. What they have given? Nika Limited has obtained a term loan of 620 lakhs for a complete renovation and modernization of its factory on 1st April 21. So basically there is a loan of 620 lakhs on 1st April 21. Plant and machinery was acquired under the modernization scheme and installation was completed on 30 April 22. 1 month only. Okay, plant and machinery was acquired. It was acquired. Installation was completed on 30 April. So I actually acquired plant for this renovation. Okay. An expenditure of 510 lakhs was incurred on installation of plant and machinery. 54 lakhs has been advanced to suppliers for additional assets acquired on 25th April, which were also installed on 30 April. And the balance of 56 lakh had been used for working capital. Now the point is, out of this 620, you used 510 on plant, 54 as advance for additional assets, and 56 for working capital. Please check how much is the total. How much is the total? It is 510 plus 54 plus 56. It comes to 620. So they have given the complete bifurcation. Where did I use these funds? First is the plant, the second is additional assets, and the third is working capital. Obviously, this working capital is not a qualifying asset. It is not a qualifying asset. Obviously, you need to expense it out. But what about this 54? Obviously, I can say if plant and machinery is utilized for modernization, I will utilize it, right? So I can say it is a qualifying asset. Depends upon your assumption what you are taking. Again, the other assets which I am taking, I have the option to to assume whether it is a qualifying asset or not. If I have purchased it or acquired it, it may be not be a qualifying asset because it is ready for its intended use. So at that point of time, you can have an assumption. Over here, I have assumed that these two are the assets which will be required for construction. And that is why I have taken it a qualifying asset on the assumption that they will take substantial period of time to get ready for its intended use. And the working capital is not a qualifying asset. Okay. Next, 68.2 was the total interest paid. So remember I told you, if the expenditure are given, the interest will also be divided in the expenditure ratio. So you just have to capitalize, that is 5, 10, 54 and 56. The total interest will be apportioned in this parts. To be capitalized, and not to be capitalized, that is to be transferred to P&L. That is, the interest amount will be transferred at the expenditure ratio. The interest will be apportioned at the expenditure ratio. So whatever the expenditure is, just apportion the interest in that ratio itself. Now, again, I have taken an assumption over there. Even if you take that these both are not a qualifying asset, since it is not since they are already ready for use, ready for its intended use, at that time this answer will also hold good. But since nothing was given, I assumed it as a qualifying asset. You can give the assumption note clearly. Okay, next, moving ahead. Next point. Yeah. So this was the case of, if you remember, cessation. 4 phases. I have two are complete and 2 are still incomplete. That is the questions, right? So I'm reading it out. Please pay attention. Harish Construction Company is constructing a huge building project consisting of 4 phases. It is expected that the full amount will be constructed over several years, but phase 1 and phase 2 of the building will be started as soon as they are completed. So basically there are 4 phases and 1 and 2 will be started. Following is the detail on different phases of the building during the current year. Cash expenditure and building purchased. So the total expenditure is 34, 64, 55 and 68. As I told you, all the interest will be apportioned in the expenditure ratio. This is the expenditure ratio. Total expenditure on all phases was 221. Loan taken at 15% was 200. Loan taken was 200. So what is the amount of interest you will be paying? Obviously 200 into 15%. So 200 into 15% comes to 30 lakh rupees. You will apportion this loan in the ratio of the expenditure made. Again, the previous question was a similar like this only. The interest will be apportioned on the basis of expenditure made. The expenditure was 34, 64, 55 and 68, right? So I'll apportion this expenses 30 lakh rupees in the ratio of 34 is to 64 is to 55 is to 68. The 4 answers comes to 461, 538 and so on. Obviously you need you already know how to take the ratio, right? Moving ahead. Now they have given during mid of the current year, phase 1 and phase 2 have been operational. Find out the total amount to be capitalized and the expense to be yes. See, they have given mid of the year. Can I say 6 months? So after 6 months I cannot capitalize because it is ready for its intended use. After 6 months I cannot capitalize, right? So phase 1 and phase 2 I need to divide it in 2 parts. First part will be capitalized and the other 6 months will be expensed out. So over here, mid of the year is given 50% capitalized, 50% P&L. 50% capitalized, 50% P&L. And for 3 and 4, the total amount will be capitalized itself because they are still in WIP stage. So the total amount which needs capitalization is 1, 2, 3 and 4. Total capitalized and 2 amounts will be transferred to P&L. These 2 are the amounts which will be transferred to P&L. These are the points, right? So as I told you, the 4th and the 5th question were on expenditure basis. Whatever the amount of expenditure is, the interest will be apportioned in the expenditure ratio, right? These are the 2 points. So we have completed with 5 questions. Okay. The next one. 6th question. An entity constructs a new head office commencing on 1st September 21, which continues till 31st December 21, and it is expected to go beyond a year. See what they are telling. They commenced on 1st September 21, which continues till 31st December 21. Okay, 31st December 21, and is expected to go beyond a year. Directly attributable expenditure to the beginning of the month on this asset is 2 lakh in September 21 and 4 lakh in each of the months October to December. October to December. 4 lakh in each month they are telling. So that means 2 lakh in September, 4 lakh in October, 4 lakh in November and 4 lakh in December. Each month they have tell, right? The entity has not taken any specific borrowing to finance the construction of the asset, but has incurred finance cost on its general borrowing during the construction period. During the year, the entity had issued 9% debentures with a face value of rupees 30 lakhs and an overdraft of 4 lakh, which increased it to 8 lakh in December 21. There's a twist now. Okay. Interest was paid on overdraft at 12% until 1st October. Till then the rate was increased to 15%. See, there is a lot of confusion in this case now. Over here, from this to this, I'll explain. I'll read it again. During the year, the entity had issued 9% debentures with a face value of 30 lakhs. So basically, debentures were issued for the full year, 9% 30 lakh rupees. We also had a 4 lakh rupees overdraft, but which increased to 8 lakh in December 21. So basically, in September and in October and in November, it was 4 lakh only. And in December, it went to 8 lakh. From December to onwards, it was 8 lakh. Interest was paid at 12% until 1st October. That is, for the month of October, for the month of September, it was 12%. From October, November, December, it went to 15%. So what were the borrowings? So I've given a brief over here. Please pay attention. Debentures from the beginning of the year. There is a general assumption that the rate is from January to December. Okay, from Jan to December. Over here, they have issued 9% debentures of 30 lakhs. So can I say debentures of 9 lakhs at 30 lakhs at 9%, they were issued for the complete year 12 months. Bank overdraft. From Jan to September, they have clearly told the interest was increased from 1st October. Interest was increased from 1st October. So if the interest is increased from 1st October till 30 September, it was 12% only. And till 30 September, it was Jan to September, it was 4 lakh only at the rate of 12%. But what they have given? They have given the amount increased from 4 lakh to 8 lakh in December. In December, you increase the amount to 8 lakh. But the rate was increased on 1st October. So over here, I have taken 4 lakh, that is October and November, at the rate 15%. At the rate 15%. Why? Because from January to September, it was 4 lakh. October, November also, that was 4 lakh. And from December, it went to 8 lakhs. So first of all, I'll explain you this again. From Jan to September, Jan, Feb, March, April, May, June, July, August, September, it was 4 lakh. For October and November, it was also 4 lakh. From December, it went to 8 lakh. From December, it went to 8 lakh. Okay, this was the first point. The rate was increased from 1st October. That is, till September, it was 12%. From October, it went to 15%. And obviously, December also, it was 15%. So I've given the months now. 9 months, 2 months and 1 month. And then I have to calculate the interest rates. This is how I use the capitalization rate. The total interest and then 12% for 12 by 12. This 4 lakh into 11 months, that is 9 and 12, 11 months. And this 8 lakh for 1 month. This is the capitalization rate. The important point over here was the capitalization rate. The important point over here was the capitalization rate. So this was the capitalization rate and the capitalization rate comes to 9.4951. See, I'll explain you once again the bank overdraft part. They have given 2 points over here. First is bank overdraft. They told the rate increased from 1st October. Okay, and they told bank overdraft till November it was 4 lakh only, and from 1st December it went to 8 lakhs. So what I've done is I've bifurcated on the basis of the figures given. So can I say from Jan, Feb, March, April, May, June, July, August and September, this 9 months, it was 4 lakh only. For October and for November, it was 4 lakh only. And for December, it was 4 lakh only. Sorry, it was 8 lakh. Right? I have bifurcated it figure wise. Jan to September, 4 lakh. October and November also 4 lakh. And for December, it was 8 lakh. Now, after being this, do at the rates. When was the rate increased? It was increased from 1st October. So can I say till September it was 12% and after that it was 15%? This was the case, right? So this was very important to understand the bifurcations and to calculate the weighted average cost of borrowing. So this question was important on the basis of WSCB, right? I hope you got this point. And the last point of this chapter, last point, is nothing but the holding and the subsidiary, the group companies. See, I'm not taking a question on this, but I'll explain you the entire concept. So please pay attention on this concept. So A Limited is a holding company and he took a loan. A Limited took a loan, right? A Limited gave a loan to the subsidiary, which is known as B Limited, and B Limited spent this money on the qualifying asset. So I've given you the standalone balance sheets. Standalone. What is the entry of loan taken? What is the entry of loan taken in standalone? So obviously, a bank loan will be shown under liability. And A Limited has gave this loan to B. That means for A Limited, think from the point of view of A Limited, was there an asset? Obviously, it is given the loan, it is an asset. So over here, you can say the loan was taken, but there was no asset constructed. Was there an asset constructed? The answer is no. So comes the question, was there a loan? The answer is yes. Is there any asset to be constructed? The answer is no. So can you capitalize? The answer is no. You cannot capitalize. How will you capitalize it? You don't have any asset to be constructed, right? So in the standalone financial statements, if I am the holding company, I will not be able to capitalize the asset. So capitalize the interest. Why? Because I have taken the loan. True, but was there any asset to be constructed? The answer is no, and therefore no capitalization over here in the standalone financial statements. Okay. B Limited. Was there an asset? Yes. But was the loan taken by B? The answer is no. It was not taken by B. It was taken by A. Right? So A Limited just gave this money to the B to construct the asset. Since the loan is over here and the asset is over here, no one can capitalize this. Capitalization won't be done in the standalone financial statements. But the point is, in consolidated financial statements, it will be something like this. Loan obviously will come over here, asset will always come over here. So can I say there is also a loan, there is also an qualifying asset? Can I capitalize the interest cost? The answer is yes. You can start capitalizing it over here. So I've given the entire explanation through the help of balance sheet presentation. Please pay attention. If I am the holding company, you yourself feel you are subsidiary. I am the holding company, I took a loan. So loan was taken, but I did not use for the qualifying asset. I haven't used. So basically I cannot capitalize the interest. I gave this money to you and I told you construct a building. So you started constructing. So there is a construction, but is there a loan taken by the bank from you? The answer is no. Loan was taken by me, not by you. And therefore there is no loan with you and there is no asset for me. In standalone financial statements, we will not be able to capitalize. But in consolidated financial statements, obviously our balance sheet will get merged. So there will be a loan and there will be an asset. Obviously, if there is a loan and there is an asset to be constructed, I will capitalize it, right? So this was the point. Okay. The second point, the second and the last one. Please pay attention. This is very important. A Limited is the holding company. B Limited is subsidiary company. And B Limited gave a loan to C, which is also a subsidiary of A. And C spent on qualifying asset. Please pay attention now. In the balance sheet of A, standalone, was there a loan? No. Was there a loan given? No. So obviously there is no loan and there is no asset in the balance sheet of A. Okay. In the balance sheet of B, he gave a loan, right? The loan was given, true. Was there an asset? No. Was there a loan? No. The loan was given, true. Okay. With C Limited, did C Limited took a loan from B? The answer is yes. So C will say, I have a loan and I'm using it for qualifying asset. So can C capitalize? The answer is yes. C can capitalize. That means A do not have loan, A do not have any asset. B gave the loan but do not have any asset. C has the loan and has the asset. Obviously it can capitalize. But in the consolidated financial statements, the right marks over here, 1, 2 and 3 goes over there. Asset and loan. These three, right? Can I say in consolidation, the loan given and the loan taken will get set off. This will be eliminated. That means there is no loan left now. There is an asset, but there is no loan. So in consolidation, there will be no capitalization, because in CFS, intercompany profits or intercompany loans or any assets exchange between them will get eliminated in consolidated financial statements, and therefore there is no loan left, and therefore the asset will be self-constructed, but there is no loan and no amount will be capitalized. These are the points. So to brief out, the very important point was specific and general. The two basic points, right? Basic points. On specific, date is not very important, and also you can subtract temporary income. On general borrowing, always check the dates from the date till year end or the completion date, whichever is earlier. No temporary income. No temporary income. Third point was on foreign exchange. I explained you the concept of foreign exchange. The loan is taken in the foreign currency, so we need to convert, we need to pay interest, and exchange loss can also be capitalized. Also in the second year, what to do, I have explained you that. Next point, if there is a general borrowing utilized for multi-purpose as in for qualifying also, for not qualifying also, in that scenario, the interest will be apportioned. The interest will be apportioned on expenditure basis. Whatever the expenditure is done, you will apportion it on that way, right? This is general borrowing. And the last point was the group companies. The group companies, not very important from exam point of view, but they can ask a question. So as I told you, just check if it is individual basis. Both the conditions should be valid. There should be a loan and there should be an asset. If in the balance sheet both are holding good, at that time you can capitalize. If any one of the point is not there, then you will not be able to capitalize in CFS also, and in the standalone financial statements also, right? So I hope you got this point, and if you have any query till here, feel free to ask. If you have any query, feel free to ask. Yes, if you have any query till here, feel free to ask. Question 4, okay. I'll check where the question 4 is. Yeah, over here. Nika. Anything else? Yes, Jyoti, perfect. See, question 4 states that 620 lakhs was spent on three things. 510 was spent on plant and machinery. 54 was spent on advance paid to suppliers for asset, and the rest of the amount, which was 56, I guess, yes, 56 was for working capital. Working capital. See, this amount is obviously not a qualifying asset. This amount is for not a qualifying asset. Now comes the question, these two amounts, are they qualifying asset? I assumed it, yes, they are qualifying. Now you will say, sir, why did you assume this? Because on the first line, in the first line, they have given complete renovation and modernization, and the plant was acquired under the modernization scheme. Because I need to renovate, I have acquired a plant. And that's why I can say I can capitalize the amount of plant and machinery on that itself. See, there is a very basic point. I'll explain you that. Let's say I'm constructing a dockyard. I'm constructing a dockyard. Obviously, whatever the expenditure will be made will be obviously capitalized. Obviously, the loan amount will be capitalized, right? For this dockyard, I purchased a crane. I purchased a crane. Now, this becomes a purchase asset, right? This becomes a purchase asset. Can you capitalize interest on the purchase asset? The answer is no. But the point is, did you purchase it to use somewhere else? The answer is no. You purchase it to complete the completion of the dockyard, right? So I will say this is not a standalone asset which I'll be able to use it further. I'm using it for this only. That means I have utilized this funds for the construction purpose only. Since I have utilized these funds for construction, obviously it needs to be capitalized. So the interest cost will be capitalized. This is the point. So the rule over here is, if I am treating this as qualifying asset, obviously the interest cost needs to be capitalized. Total interest was 68.2. 68.2. I will apportion it on the basis of expenditure made, that is 510 is to 54 is to 56. I'll capitalize it. And in the ratio. So obviously the first two amounts will be capitalized and the last amount will be transferred to P&L. Yes. Do you have any other query? And okay, whoever is online right now, if you need any specific IND AS, feel free to tell me. I'll try to cover that IND AS first. Yes, you all tell me which IND AS you want. Leases, okay. Leases 116, okay. Yes, anything else? 115, okay. Revenue, yeah, 116 is done. Leases is 115 is revenue recognition. Okay, so yes, I'll be taking these IND AS with you. 113 fair value measurement is very easy. Okay, I'll try to cover that also. See, what was there in my mind, I was able to cover this leases. I will also cover the impairment asset. Impairment is one of the important IND AS which has been repeatedly asked in your examination. Lease is also one of the important IND AS which has been continuously asked, right? So I was thinking to cover these two also. Yes, Vishnu, you'll be getting the question bank for today also, my handwritten notes also. If you have joined the group, that is, yeah, if you have filled up the form, you'll be getting the notes for sure. Okay, so that's it for today. यहाँ stop करते हैं आज.